Good morning, traders. So how do we trade the Aussie today? So I've got a couple of trend lines drawn in to start the video off, and I think the first one is the low of last week, because that's going to be a critical level. But more importantly is this trend line. So this is the weekly uptrend line from sort of November 2016. And you can see it's 1, 2, call that 3, 4, 5, 6 touches that we've had on this trend line. So it's a pretty well-respected trend at the moment. And should this break, I think you're going to see an acceleration to the downside. Okay, so this top trend line that I've drawn in here, just to indicate, we are consolidating. This is still a big consolidation phase. Okay, the worrying factor is that we are staying below the 20 moving average, which is this middle green line here. Okay, and this blue, which is our 5 moving average, is below the 20, which indicates downward momentum. Let's just get to the daily. And again, there's IG still GT24 still missing a lot of data here. But it's actually irrelevant. I'm only really interested in what's going on in this area here. Okay, the level, we know that level is there, and we can pick up levels on these tails here. So the first thing that you'll notice is we are forming rejection bars off the 200 daily moving average. So this is the 200 EMA, exponential moving average, okay, and on the daily time frame. So this is the third day in a row that we have hit this and we've rejected. And what I'm going to do is just put this level in. I'll take this tail here as our level. Okay, let's move this over a bit. Okay, so this in itself is a fairly worrying sign for the bulls, because we're not getting over the 200 daily moving average. Okay, oscillators are still pointing to the downside, and on the daily this is indicating there's still more downside to come. So what could be happening is we could be consolidate and move to come and test this trend line properly. Okay, now I want to get to the 4 hour. You'll see a similar pattern. So you'll see we are still battling to get over the 200 4-hour moving average. See how we're rejecting off it. So it's the daily and the 4 hour now that we're rejecting. And this is almost becoming a consolidation, very similar to what we had up here. We consolidated and we didn't break the upside, we broke the downside. So the longer we go sideways, the lesser probability of a continuation, and the more the probability of a 50-50 chance of it breaking either way. Okay, so it's normally, you're going sideways for around 20 bars, then you start to wonder which way you're going to go. Okay, so this one's 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So this is 12 bars at the moment. So we're still pretty much in a consolidation phase on the 4 hour. On the 1 hour, it'll be a different story. Okay, so there's not really much that I can read into that. Okay, so on the 1 hour, just recap on Friday. Friday we had this falling wedge. Okay, we had the falling wedge which broke up, and our wedge target has been hit. Okay, so first target would have been 50% of the height of the wedge, second target would have been the height of the wedge, which is right over there. So that being said, we are now starting to see a grouping of the oscillators, okay, and notice what's happening here on the 200 1 hour moving average. We are failing to get through that as well. Okay, so now if we start looking at how long this consolidation phase is on the hour, we are at 42 bars that we've been going sideways. Okay, it's a relatively nice range trade because it is almost 1,000 point range. So what am I expecting today? Well, I'm expecting this level to fail, to be honest. I think whatever does happen today, we are either this area is going to get rejected again and we are going to pull down. The big question is, how are we going to pull down? Okay, so if we just take this trend line here, and you'll notice some very interesting price action interactions there. You can see how we trended up, we broke through, came down, bounced off the 20 moving average, and then came and tested this break. So in my eye, we are going to see another test of these lows. Okay, so that's kind of what I'm expecting today. So I'm expecting to take a short at the top here and for it to fall. I don't know if we'll, it all depends now. So if we do, this is where you're going to need to use some logic. So if we find support at 61.8, which is this tail here, okay, and we start turning, then you can expect a break to the upside, okay? If we fail to find support here and we break below here, you can more than likely expect this bottom gap to close, and you can expect it to test the lows of this range. Okay, so let's just get rid of this. That's kind of the picture that I see at the moment. And it's quite simple, very similar to what we had at the top here. It's short the top and long from the bottom. So we're going to trade the range, basically. Now, inside the range, there is some interesting developments happening. So we do have a inverse head and shoulders. So there is the left shoulder, there is the head, and there is the right shoulder. Okay, so we do have a potential reversal pattern there. I'm not entirely convinced that's going to play out. We also have a potential double bottom here, but with these rejection bars here, I'm not convinced that that's going to play out either. So for now, this is a range, it's a consolidation phase. Whether we're going to break to the upside or the downside is the question that we need to ask ourselves, but for now we trade the range. So short the top, long the bottom. Okay, so let's just get down to 12 minutes. It'll give us an idea of what's happening. And you can see how we trended on the 20 moving average, and we just trended, hit the top of the range, immediately rejected and sold off. And then the buyers tried to push it back up. But as I said earlier, this was really just a retest of this trend line break. Okay, so should this hold, it's short, and it's short to the downside. And then you're going to look for 50% Fibonacci, which is the bottom here. So let's just put that level in. Well, that's 61.8, sorry. So you're going to look for this bottom here. In actual fact, I lie. You're first going to look for that target there. That's where your first lot of profit taking should be, because there will be buyers stepping in there. Then your second target is going to be this tail. If this gives way, then you have that bottom, and should that give way, you then have this gap, and then you have the bottom of the range. Okay, so those are your levels. So the way to trade this really is, once you're in, take your first lot of profit here, move your stop to entry, wait, see what happens. If it starts moving to the downside, take profit at the second level, comes back the upside, you can get back in for another short and ride it. Just keep riding it all day until you get to the bottom. Okay, converse is true if we break to the upside. So if we break the upside, then you've got pretty much a swing trade for, let's just be conservative here, around 850 points. And if we take 850 points from here, around there, which tests the underside of this here. Test this breakout over here. Okay, so, and obviously it won't go there in one go. It will stop at each sort of, it'll stop at the gap close, it'll stop at the high, stop at the high, stop at the gap, stop at the tail, and then finally hit its target before there'll be a big sell-off. So that's kind of the play. Kind of 50-50 at the moment. For me, this is a range. Once this level breaks, then we can take the range heights into consideration. If we break the range heights at the bottom, but that won't happen today, then obviously we start looking for targets to the downside. Okay, so that's my play for the day. It's play the range, short from the top, long from the bottom. If the range does break, then we need to reevaluate and look where we're going to. Anyway, guys, hope that helps, and enjoy the day. I'll catch you guys later. Cheers, man.